Eigenlayer is designed on the principle of open innovation, which means let the people decide what let each AVS decide what they really want to do. Each staking provides objective slashable security. Eigen provides intersubjective social slashable security. And your own token provides alignment, which is a different kind of cryptoeconomic security. Your token stakers are the most aligned. They are the ones who will feel it the most. So these are different kinds of crypto economics. This is like a Swiss Army knife of crypto economic toolkit. So you decide what aspects you want to load on, like your own token, what aspects you want to outsource. So it's designed to be this flexible system.
We've teamed up with the Wormhole Foundation, stewards of the Wormhole Protocol, the leading interoperability platform powering cross-chain transfers for 200 plus multi-chain teams. Claim your unique Wormhole NFT just for 0x Research listeners today. Pear is an innovative pair trading exchange built on top of Simio. Users can trade trending narratives with one click, from blue chip narratives such as long BTC, short ETH, right to the whiff versus bonk. The hat stays on. Simio's intent-centric architecture enables deep liquidity, source off-chain, and broad on-chain, and combined with Pair, has democratized access to complex trading strategies typically reserved for institutional traders.
Avalanche is a smart contract platform that has a novel consensus protocol, subnet infrastructure, and the Hyper SDK toolkit, which allows Web3 developers to easily launch custom, powerful blockchain solutions. You can start building today by checking out the link below.
Before we get into today's episode, just a quick disclaimer. The views expressed on this podcast by either myself or any guest are their personal views and do not represent the views of any associated organization. Nothing in this episode should be construed or relied upon as financial, technical, tax, legal, or other advice. All right, let's jump into the episode.
What's up, everyone, and welcome back to another episode of 0x Research. Today, I have a fantastic episode lined up. We're joined by Sreeram, the founder of Eigenlayer, a restaking protocol built on Ethereum. Sreeram, thank you so much for joining us. How are you doing?
Very good. Thank you so much. Really excited to be here and chat with you all today.
Fantastic. Today is Thursday, May 9th, but this episode will go live in 2 weeks on Thursday, May 23rd. As a reminder, you can use code 0xresearch10 for 10% off your Blockworks Research subscription. All right, let's get into it. Sreeram, do you want to give a short introduction on Eigenlayer and what you guys have been up to over the past month with the mainnet launch, the AVS mainnet launch, as well as the Eigen token?
Yeah. The Eigenlayer is a protocol that allows new decentralized protocols to borrow trust from the Ethereum staking. So, the root of trust in Ethereum, why do we trust the Ethereum blockchain? Is because Ethereum is built on proof of stake, which means you stake your ETH and then make a promise that you're going to run the Ethereum network correctly. And that's why we trust that the Ethereum blockchain is running correctly. And what Eigenlayer does is to extend this, like people can stake their ETH and make a promise not only that they're running the Ethereum protocol correctly, but also that they're running other decentralized protocols correctly. So this creates a new economy where, like, anybody can now just build new software. We call them AVSs, actively validated services. Just think of them as like any decentralized protocol. Now, anybody who has an idea for how to build a decentralized protocol, they can write it as an AVS and write arbitrary code. There's no constraints on what kind of code you can write, and then deploy it to Eigenlayer. And Eigenlayer basically brings the stakers, which is the economic security, the node operators, which is the computational resources to actually execute these transactions, and then the settlement, which is on Ethereum there is slashing and proofs that you can actually write to make sure that the nodes are doing their job correctly. So that's the kind of Eigenlayer economy. So you can think of it as it's bringing together stakers, operators, and AVSs to actually create useful, productive services for the crypto economy. Another way of thinking about it is, what is the kind of dividing line between what we call crypto or blockchain and everything else is decentralized trust. And so decentralized trust is the raw material out of which the crypto economy is manufactured. You can think of Eigenlayer as a marketplace for decentralized trust. So you can actually kind of decentralized trust as a service. And so now, like, once you have decentralized trust as a service, you can start building newer and newer interesting applications on top. And so that's the that's the goal of Eigenlayer. So in terms of the roadmap and where we are at, you know, last year, I think June, July, we launched the mainnet where we had one side of the marketplace on mainnet, which is staking. So essentially, you can stake via two mechanisms. One is you can stake in Ethereum and set the withdrawal address to go through. It's like a stop through the withdrawal flow, go through the Eigenlayer contracts. So that's a first mechanism we call native restaking. The other one is called liquidity staking. You can take an LST and then deposit it. These two features were live on mainnet, now for 9 months, and we took a gradual rollout approach. This is our consistent approach we adopt across all our deployments. The gradual rollout is we start with a capped amount of deposits and then like slowly raise it so that we can stress test the system all through. Smart contract systems are always risky, and because it's immutable, and that's true for Eigenlayer also. But the way to slowly stress test it and increase the kind of range is how we adopted it. That's the same philosophy we take to deploying the Eigenlayer system, not only the deposits on Eigenlayer. So the next phase of the rollout was, in April, where we brought not only stakers now, node operators on mainnet, AVSs, anybody can build and deploy AVSs on mainnet. Our own particular AVS called Eigen went on mainnet. So Eigen is a data availability system, which is a data publishing system for rollups. So if you're an Ethereum rollup, it costs a lot to publish data on Ethereum. Instead, you publish data on Eigen. So Eigen went live, and the whole ecosystem kind of came together. Two major features missing in the mainnet is payments. AVSs cannot do payments yet to operators in protocol. Of course, there can be out of protocol payments, which we see some emerging. The next one is slashing. The core contracts for slashing were already there from last June, because you can the core of slashing is very simple: burn your funds, right? So it's not like it's difficult to write a contract that just burns your fund. The hard part is actually making sure that the system, and like when an AVS deploys on top of it, how to make sure that they're actually the slashing conditions are solid. How do you make sure that there is a process for vetoing? Does every slashing needs to go through the veto? There's a lot of complex details that matter a lot, and so we're just taking again a cautious rollout approach. So that's what's on mainnet. One of the reasons payments is not yet on mainnet is we want to understand the market structure better as to what is the balance of powers, because initialization on some of these marketplaces matter a lot. If one side has too much market power, they'll basically command. So we're observing before we deploy. So that's the approach that we're taking. Oh, of all the things I forgot to mention, as we were building several of this kind of a mechanism for AVSs to borrow decentralized trust, one aspect that we found was missing is the ability to slash for things that cannot be proven on chain. And so that led us, particularly to develop a mechanism to do it, and that's gave rise to this concept of the Eigen token, which we announced in a major white paper a week or so back. So that's the other dimension to the launch. And the going forward, several of these features are coming live: payments coming live, slashings coming live. Again, gradual rollout of all of these features.
Perfect. A lot to unpack there, but I kind of want to start off with the Eigen token. I feel like that's the most recent and I guess like the most like, in my opinion, one of the most exciting parts of it over the past month. I kind of want to like diving into the white paper. I think the first thing that most people notice is intersubjectivity, and I kind of want to get your take on like how you would describe this to somebody who is like just reading it for the first time. What do you want them to take away?
Yeah, I know we coined the term like pretty seriously, but it's amazing to see it's a meme. It's in crypto. We memes matter. In fact, intersubjectivity itself is basically just another way of saying what we all believe in. So let me start from the basics. I think, you know, back in the day, like maybe 5, 6, 7 years back, if you think about like what people were talking about, what is a blockchain? And some people would say a blockchain is a truth machine. And I just heard this thing and I'm like, how does blockchain know anything about truth? Even I don't know what is true. Like, how does a blockchain know what is true? And that was a weird kind of a phrasing. And so that caught our attention quite a bit. So I'm like, what does a blockchain really do? And over time I've kind of created our own mental models for what a blockchain is. And one way to think about it is it's a device for commitments, right? I make a commitment that I'm sending this money to you, which means that commitment is automatically enforced. So you can this the reason I mentioned the truth machine thing is, it's if something like that can exist, it's really amazing that there is a truth machine that can serve as a kind of like a center point for society. But then you start thinking about what kinds of truths exist, and I would say roughly you can say that there is objective truth, which is mathematical truth, right? Like, so 1 plus 1 is 2 or whatever. There's mathematical truth. Scientific laws are a form of objective truth. Okay, the law of gravity, relativity, whatever. But so what blockchains have access to today is fundamentally just mathematical truths, right? So I have a private key relative to a public key, and therefore I can send my Bitcoin. That's a mathematical kind of a statement, that I have the public private key relative to the public key, so I have the rights to move my Bitcoin around. But if you look at uh, a lot of society, it's built on social truths. A social truth might be, uh, is gold worth anything? Who is rich? A social truth might be, who's the president of the United States? Who's the founder of Eigenlayer? These are all social truths, and they're truths because we all agree that it's true. And so, if you look at kind of like the structure of coordination in society, you'd see that a lot of coordination is built out of social truths. And a way for describing what is social truth is intersubjective. What is objective is facts, right? Subjective is beliefs that a person holds. Intersubjective is things we all believe in. We all believe that Biden's the president of the United States, and somebody is the CEO of some company. All of these kinds of statements we all believe in, and that's the right kind of philosophy of what how do we bring if you want to build a truth machine, then you need to know what is the basis for what you're calling truth. And intersubjectivity or social truth is what a lot of when you think of an oracle problem, like how do you know the bring the BTC to USD price on chain? It's basically intersubjective truth that the price was at that level at that time. You want to settle a prediction market, it's intersubjective truth that the Biden won the election or not won the election. The You want to know, uh, taking closer to home example, like we were building EigenDA, a data availability system. One of the big faults of a data availability system is there's two functions of a data availability system: is to store the data and then to serve the data. Okay, it's possible to create a zero knowledge proof that you're storing the data. It's because you know the data and you know your private key and you create a zero knowledge proof for it. That basically means you can actually prove that you're storing the data. But did you serve the data to all honest people who are interested in it? That's not observable on chain. It's not provable. It's not a mathematical statement, because I may say I served it, my network was bad or whatever. Like, it's not observable, it's not rigid, it's not solid, but it is intersubjectively observable. We all sit outside and we see the system and say, hey, I tried querying this RPC and I never found this roll of data. I went and ran a full node and tried to connect to the peer-to-peer network for a week and I still don't have the data. I tried to run a light node and I tried to sample portions of the data and I tried to download it. I still don't have the data. And all of this tells not only me, but everybody who's outside can observe and say, oh, the EigenDA nodes all colluded and withheld data. So there is a data availability fault. So this is an example of an intersubjective truth. So Eigen token was created as a framework for bringing intersubjective truth on chain, or to punish validators for intersubjective faults that we will all agree from outside the reference frame of the blockchain that such a fault happened, but inside the reference frame of the Ethereum blockchain, you the blockchain doesn't know. So that's the high level idea of the starting from, if blockchains were to be truth machines, what do you need? You need basically a locus, or first a definition of truth, objective and social truth. And then once you have social truth, how do you bring social truth on chain? And so that basically sets up the problem of, we want to either punish validators for things that are socially attributable but not objectively attributable. So that's the scope of what we want to do. It is, super fun that intersubjective is a kind of like a memeable term, and a lot of people meme about it. I'm super happy about it.
Wormhole is the leading interoperability platform for multi-chain bridges and applications. With over 1 billion messages sent and 40 billion in value transferred, Wormhole leads the industry in cross-chain message volume and total value transferred. If you're a builder, Wormhole has an extensive suite of tools and infrastructure to securely build multi-chain applications. You can use Wormhole to power DeFi, NFTs, governance, and so much more. And Wormhole supports over 30 blockchains and 6 different runtimes. Claim your unique Wormhole NFT just for 0x Research listeners today. Fill out a form, prove that you've listened to today's episode to receive a Pear app, and you'll get an email over the coming weeks to claim your limited edition NFT. Pear is an innovative pair trading exchange built on top of Simio. Users can trade trending narratives with one click, from blue chip narratives such as long BTC, short ETH, right to the WIF versus bonk. The hat stays on. Simio's intent-centric architecture enables deep liquidity, source off-chain, and broad on-chain, and combined with Pear, has democratized access to complex trading strategies typically reserved for institutional traders.
The age of interoperability is here. With the launch of Teleporter, Avalanche becomes a seamlessly linked network of many sovereign blockchains that communicate so smoothly they feel like a single chain. Teleporter is an EVM-compatible cross-chain communication protocol built on top of Avalanche Fork Messaging. It allows any EVM chain on Avalanche to send messages, assets, and data to one another in a simple, fast, affordable, and secure way. Teleporter and Avalanche Fork Messaging provide a new foundation for how Avalanche blockchains can communicate, and how developers can easily build cross-chain applications out of the box. Build anything you want, any way you want, on the eco-friendly blockchain designed for Web3 devs. Check it out by clicking the link below.
I'd definitely love to dive in specifically how you use intersubjectivity within the Eigen system. So I'm curious, I guess, to start off, what is the actual mechanism to decide or to actually slash within this Eigen system?
The the next point, so now that we kind of set up the stage that, okay, I want to bring social truth on chain, and how do I do that? um, Particularly in the Eigenlayer ecosystem, we have a narrower scope. The narrower scope is, we want to be enable arbitrary decentralized protocols to be built. Like that's our goal, and to supply decentralized trust for protocols that are validated by that don't need to bootstrap their own trust network. So that's the kind of like a core requirement. So we start from the broader concept of intersubjectivity or social truth, but specifically what we want is, hey, some group of nodes are promising to run a certain kind of validation, and they fail in that particular task of doing the validation correctly, and then you want to hold them to account. That is the core narrow problem that Eigenlayer wants to solve. Why does it want to solve it? Because we have this economy of actively validated services that are being built, and you cannot slash ETH for things that are not provable on chain. You can by putting a committee and saying the committee is going to decide. Then you don't really have higher trust than the committee itself. And of course, some people are going to do it, and but we don't. It's not a rigid enough principle to build a long-term sustainable economy on top of. So how do we slash validators for faults that are attributable outside, but not socially, but not on chain. That's the specific scope. That's why we call it an intersubjective work token, or you can think of it as an intersubjective staking system. Right. So we want to just so this is in difference from things like Claros or like an Aragon court, where you have jurors and people are actually sitting down and debating and deliberating and coming up with what is the right answer. That's not the scope of eigen token at all. The scope of eigen token is nodes are performing automated validation. In the normal mode, no humans exist, right? It's just nodes are performing automated validation. You may be running an Oracle, you may be running a DA, you may be running an AI, you may be running a gaming system, something. It's all automated and just like running on its own. But they all collude and like try to actually attack the system. And then when the attack happens, they should be slashed. That's the like, narrower scope. So that's why we call it an intersubjective fork token. You have to stake the token for doing automated work like digital validation. And when you're doing that, we want to make sure that if you're not doing it right, you can be slashed. Okay, how do we slash people for this? And the principle goes back to how does Ethereum slash when a majority of nodes are malicious, majority of stakers are malicious. Okay, so one of the things I was really like surprised to learn as an academic coming in the academic world, a lot of the models for how blockchains work are all based on, if a majority of nodes are honest, then the protocol works, and the remaining nodes can do whatever they want, but the majority are honest, then it works. That's the kind of like models that academics, I used to study 3 years back. But as I entered into the Ethereum ecosystem, one of the things I realized is actually the people building these blockchains are, specifically in the Ethereum community, worry about, even if the majority of the nodes are malicious, the system should still survive and go forward, which is a crazy kind of like an aspirational goal. And that's the same goal we have. So you ask, how does Ethereum survive a majority fault? And the answer is fork the chain. Like that's the answer. If the majority of the validators go rogue, as the community, as the society that is observing from outside the Ethereum blockchain, we can all see that these guys have behaved maliciously. There should be a observability. For example, the majority of nodes sign an invalid block. Then it is observable that, hey, the block is invalid. Or the majority of nodes sign a block header, but the data is not available for Ethereum. It's observable from the outside. So any observable fault automatically triggers all the outside nodes to come in and say, hey, this is actually wrong. I'm going to fork the chain. Okay. So forking is a mechanism to create not only a penalty for the majority nodes, but also to create this, bring social truth on chain because you fork the chain. Okay. So that was the basic starting point. That's how you become, that's a principle, right? Like, so you start with the social truth, but then how do you bring the social truth to bear and on a chain? And the principle is forking, right? You fork the chain. That's how you do it. Now you come and, Vitalik wrote an article back in June last year, and he said, do not overload Ethereum consensus. And, you know, it's a very important article, and it sets the Schelling point for what we as the community actually agree or disagree. So it's a very difficult thing when you have social consensus to agree on what we will fork the chain for and what we will not fork the chain for. And so Vitalik's kind of setting a Schelling point for, hey, Ethereum's not going to fork if Eigenlayer or somebody else screws up. That's what he's saying. And it perfectly makes sense because a system with undefined social consensus basically leads to chaos. A system with predefined social consensus and self-verifiable, self-observed. For example, in Ethereum, everybody knows if the Ethereum block is invalid, we will fork the chain. You don't need to tell anybody. It is a pre-agreed rule that we self-execute. So this is another important thing that I want to point out. People think, oh, Eigen token is used for social consensus. We don't mean social consensus as in we all meet in a room or meet in Discord and then we make a decision. That's not what we mean. We mean that there is a pre-agreed rule for how forking will happen, that you can self-observe and self-execute. Now, you have to fork. And so this is how Ethereum works. Now, coming back to how do we bring this, the problem is if we're building Eigenlayer on top of Ethereum and somebody is slashing based on a committee and the committee goes rogue or they lose the keys or something happens and they just do this mass slashing, and then now Ethereum has to fork. That's a disaster. So we don't want that. We want to containerize a certain portion of slashing in the Eigen ecosystem. And so what we did is we figured out how to create a system where forking doesn't happen at the level of the blockchain, but forking happens at the level of the token. It's a brand new kind of idea. The roots of this idea exist from before, and I can talk a bit about it. But the idea is, I don't need to drag the Ethereum chain into it's like my family dispute, and I'm dragging like the United States to it. It's not fair, not reasonable. So can we actually build a containerized system where the token can fork? Like it's a forking at the application layer rather than forking at the chain layer. So how does this work? The Eigen token is what we call a forkable token. Just think of okay, why is this particular ERC20 contract the Eigen token contract? Because we all agree it's intersubjective truth. It is social truth that contract is the Eigen. In fact, you can go to Etherscan and you'll find scam tokens called Eigen already deployed. Right? Somebody's deployed them and they think but nobody believes that that's the Eigen token. That's why that is not the Eigen token. Which is the Eigen ERC20 token is a social truth. It is not an objective truth. So, okay, so that's the starting point. So now you can say, oh, maybe all you need to do is, there's the Eigen ERC20 token. And if some people go crazy, we just fork the Eigen ERC20 contract. That would be the simplest version of this. And really, Eigen's just a system built on top of this core idea. That all you need is all value. Is the Eigen token, is that the ERC20 contract of Eigen token is a social truth? Can we, if the majority of the nodes, which is the problem that we're worried about, is majority of Eigen stakers go and attack an oracle because you need a majority to misreport in order to get a wrong answer. You need a majority to withhold the data in order to get a wrong answer. You need a majority to do some other thing. So each of these AVSs, you need a lot of the Eigen stakers to actually behave badly in order to create a malicious outcome. And maybe then it's worth it to actually fork the token. Okay, so that's the kind of the next level of the idea is you have all values intersubjective. Let's just fork the token. The problem with why you can't do this for any ERC20 token today is that token has a non-containerized life, which means somebody is trading that token in an exchange, somebody is using that token in a DEX, and now you say fork the token, then it's chaos. Utter unrestricted chaos because somebody's selling the token, but you say no, that's not the token and this is the token. What happens, right? So that is a major problem. So you can't just go willy-nilly fork a random ERC20 token. It doesn't work because that token is, the surface area of the token is very wide, and so now you can't go and fork the token. If you fork the token, then you have uncontrolled downstream impact. Okay, so now, and that's really what the Eigen system is designed to solve, is we call this property isolation. Isolation is staking and forking should be isolated from holding a token, from having a token in DeFi, having a token in all these other places. If I can create a system where a version of the token is forkable, but another version is not forkable, then you kind of solve this problem. So that's the high level idea. Then there are other problems, which is forking creates a social cost. Okay. So suppose I have a token and then Vesty comes and says, oh, this is the real token. And then now all of us have to create chaos and confusion and everybody has to sit down and debate whether that's the right thing or this is the right thing. So forking has a social cost. So we need to meter the social cost and make sure that there is a system of reward and penalties for creating a fork. If you create a right fork, you should get rewards. If you create a wrong fork, you should get penalized. Otherwise, we are wasting everybody's time here. So metering is the second problem. The third problem is I call universality. Universality is you need this to work across a range of applications, because Eigenlayer is an open innovation system. We're not building the Eigen token for EigenDA. We're building the Eigen token so anybody can come, and tomorrow you have a better Oracle, you have a better AI inference, somebody else has some other thing. They should be able to leverage this to stake and support their security. So universality has multiple dimensions. One dimension is the pre-agreement on the token should be that it is universal, like that it will fork for all these AVSs. So I'll give you an example. There is this kind of a forking idea was already there in a prediction market called Augur. And so that's where a lot of the idea like flow is, this was there in Augur, and prior to Augur it was already there in some of Vitalik's posts. And I'm told Vitalik's post has some precedent from this thing called Truthcoin. We haven't traced that lineage down carefully beyond Vitalik yet, but we'll do it. The idea is that Augur was a token which was used for, it's a forkable token, but used in the context of a prediction market. And because it's used in the context of a prediction market, Augur will not fork for data availability or some other, go and stake the Augur token and something bad happens somewhere else. It is not going to fork. The pre-agreement is not there, that it will fork for all these other things. Whereas the Eigen tokens like designed to be universal. So that's one part. There's another part to universality, which is, for example, when Augur was built, Augur had an internal crypto economic calculation. What it would do is it would maintain how many bets are open on all the prediction markets, and say, oh, the total amount of bets open on all the prediction market is 30 million. So I need to make sure that more than 30 million is slashable in the Augur token. So it has an internal metering of the profit from corruption, an adversary, how much they can extract profit if they go rogue, and what is the cost of corruption, how much can they slash the adversary. This calculation is intrinsic and maintained inside the Augur system. And because it's application specific, it's easy to do it, because oh, that's the total amount of bets. It's so in terms of intersubjective tokens, you can think of Augur was an application specific intersubjective token, and Eigen is a universal intersubjective token. Just like Bitcoin was an application specific blockchain, and Ethereum was a universal blockchain. This is the same kind of mapping. But the problem to solve is, how do you know, like, if Eigen is used across 300 AVSs, how do you know the profit from corruption? How do you know the cost of corruption? How do you maintain the system in crypto economic equilibrium and make sure that it's always secure? So that's the hard problem, right? It's not to just say, here's a token, can fork for anything. That's easy to say. It's just what you say. But the maintenance of that condition is hard. And so how we do that is a whole thing. That's a third problem. So I talked about, the cost of social consensus, the isolation between DeFi and forking, and then the universality. And then the last one is what I call compensation. So compensation is basically the idea that, if I'm using EigenDA and I got wronged because, validators basically colluded and made data unavailable, my rollup gets rugged. So I'm suffering the consequence of the bad action of these Eigen stickers. Now I should be given some compensation for this like bad action of these stakers. Till now, before Eigenlayer, no crypto economic system had a system of slashing and redistribution. This was not there. And we introduced this in a kind of a major paper called Stake Sure for just like objective false. What you do is you stake, and instead of just slashing and burning the funds, you slash and redistribute the funds according to certain calculations. And that is the fourth property that we built into Eigen. So I've just given a property tour of what set of properties we have. There's a whole thing to go into, like how we get these properties.
No, that was a really comprehensive answer. I actually had a question later on about like stake sure and with respect to like attributable security, because I did read that paper that you released back in January. It was like really thorough, and I think identifying the cost of corruption versus the cost of the profit of corruption. And I think it was my understanding, my conclusion, and please correct me if I'm wrong before I guess dive into the next question, was it sounds like the cost of security should be related to effectively like bridge volume of a given AVS and not necessarily like the TVL. Because you looked at, I think you used like Ethereum as an example. There's X dollars of TVL in Ethereum, but there's only, I think, like $33 billion of stake to the network, which at that time in January, I don't know exactly what the number is today, but it was a really interesting piece overall. So, and I know a couple other shared security solutions in the market are actually like using that as a point of reference for how they plan to I think create like a similar restaking mechanism to Eigenlayer. One question I do have, like around the universality of Eigen, the Eigen token for intersubjective slashing, and then I think drawing parallels to Augur with it being application specific. In this world of 1,000 AVSs leveraging Eigenlayer, there's obviously a cost of forking. There's a social cost of forking. How does the system going to be able to challenge every intersubjective fault in a world of thousands of AVSs, obviously, which is the I think hopefully the end goal of Eigenlayer is where we see this level of adoption. Because I understand having taking off the shouldering the responsibility of not overloading social consensus on Ethereum, but I'm concerned is that now
Eigen itself is overloaded. It's
Exactly.
a great question. Okay, so the scope of the current white paper is when what I would call perfect restaking, or you could say everybody's staked into everything. Okay, so imagine all the eigenstakers are staked into all of these different applications. Okay, which is in some sense the most overloading and the thing that people are should be most worried about. But actually, I think it's the best case. Um, okay, so what happens in this scenario? The So firstly, when we are talking about slashing, we are talking about a majority of, so we are only talking about AVSs where a majority have to do something bad in order to get to a fault. Not like one guy did something bad and then like you have to get to a fault. So that's not the scope of the type of slashability we are talking about. And the way you would handle one guy going bad is by saying that if one guy goes bad, the other guys can then like come in and double check. So you can have a two-tier escalation model, and the other nodes which are opted into that particular AVS can double check it, and like only if they all went bad, then something bad should happen. So that's the starting point. First, everybody's taking to every AVS. That's the scope of the current white paper. We have more coming up to expand it, but already this is a mouthful, so let's keep this brain full. The next one is, suppose everybody's taken into every AVS, and the AVSs are such that if a fault happens, a majority of nodes, or like one third or some significant fraction, are attributable that they are wrong. So that's the starting point. And that already like makes this a very extreme, very narrow, like rare event. Just to take the history of all blockchains, this has happened 0 times, right? And so then it used to be like, why build things that happen 0 times? Is because these things exist, it will not happen, right? Because the system is designed carefully that if you attack it, you're not going to profit, you're going to get screwed, you will never attack it. It's kind of the mutually assured destruction. It's not mutual, but assured destruction to the attacker basically means that you never do it. So that's the principle. So firstly, slashing only when so everybody's taken to everything. Second, a majority have to be bad to create a fault, and therefore even a challenge that this should be forked should be very, very rare. It's not a normal thing. So it's not we say it's a forkable token, but it's not a forking token in the sense that you don't expect it to be forking all the time. It's not like every dispute results in a fork. Nothing. It's a very, very rare to fork. And how do we impose it? Okay, so you can say, yeah, this is what we expect to happen. How do we ensure that forking is rare? And so here is a couple of parameters that are built into the protocol called CPF and DPF. CPF is called commitment per fork. Commitment per fork is, think of it as, if I want to create a fork, I need to burn a bunch of Eigen token in the current fork. Why am I okay with burning a bunch of Eigen in the current fork? Because I will of course issue myself those Eigen in the new fork, and I believe the new fork. So I can kind of burn the Eigen in this fork. It's really serious, right? So for you to actually burn a bunch of like tokens to say that the other one is the right one. And what is this parameter? Is it like 2%? Is it 5%? Is it 1%? Needs social, like, setting up of this parameter. It has not yet been set up, but some parameter exists like that. CPF, commitment per fork, which is basically saying that if you don't burn enough amount of Eigen, you will not be allowed to create a fork. So forking automatically becomes serious. It's not like oh, I just callously say, oh, here is a fork, here is a meme, and therefore I'm going to fork. You can't do it. Okay, so that's number one. Number two, on the other fork, like CPF says that I'm going to burn on the original fork. DPF is called deflation per fork, which basically says in the new fork, the total supply should be lesser by DPF. And why should it be lesser? Because you found an attacker, you're going to burn their token, at least some percent of their token. That means the total supply should be lesser. What this does is, if forking worked correctly, which means either this fork took off or that fork took off, then in both the forks, the total supply of eigens reduced. So, and you've compensated for the social cost of all the people who had to worry about, is this fork right or is that fork right? There's the social cost incurred, and you're paying off the social debt by extracting the value either by from the wrong attacker, or the wrong challenger, or from the malicious takers. You're extracting the value and distributing it to the community. So that's how metering, basically, this is our solution for metering the cost of social consensus. That's how it works. This is why we think if the system's well designed and like properly set up, forking should never happen. Just like 0% of the in the history of all blockchains, there has been a majority malicious attack which lead to majority slashing. There have been isolated incidents where you slash one guy. We are not talking about that. That could be handled inside the AVS. The AVS has to have a majority fault before it gets triggered to the Eigen social consensus. So that's how it's handled. So so this is a principle in computer science called amplification. Is basically you say a fault occurs in a small group, you amplify that fault to a majority of nodes, and then now it's enough and it's serious enough that everybody can consider that whether that is a fault or not. So that's how the Eigen system works. So it's really rare to have to be in a scenario where you need social consensus. When it is there, it's you can exert it and actually create the fork. Imagine a majority of Eigen DA stakers actually go rogue and do something crazy, then you need a last resort to actually slash them, and this creates the last resort to slash them.
Shreeram, I'm kind of curious about AVSs. How do you see the supply and demand match over there? Like, is $15 billion too much in security for what's needed? How do you see the market playing out?
Yeah. The the core bet of Eigenlayer is that once you make decentralized trust easily accessible, a lot of people will want to use it. That's a core bet. It's kind of like when you try to size the uh, market. In many times when new technology comes up, the size of the market expands because of the ease by which something is possible. So that's the core bet. How long will it take for that to manifest? It's not this year, right? It's not this year, it's not next year. It is going to take time for actually thousands of AVSs to be built and those AVSs to have productive yield. Absolutely. The But I think people are thinking about the yield question a little bit erroneously. The idea is, if you're not, so imagine there's $15 billion stake, and there's really only demand for $5 billion of like, of security. As long as there is, you know, liquid staking or liquid restaking tokens, which basically anywhere others otherwise exist, right? Imagine Lido exists and there is an LST. And what is the opportunity cost of staking on Lido? You get ST ETH versus, you can hold ETH. As long as powerful liquid restaking protocols exist on top of Eigenlayer, the opportunity cost of actually staking through Eigenlayer can be very small. So what's happening here is basically there is a trust flow under trust assumption. So that's how, like, you think about Eigenlayer is staking and having proper node operators run the software is the trust assumption that AVS is taking. But and the way you're getting the trust assurance from Eigenlayer is that, hey, these guys can be slashed if that goes wrong. But for somebody who can actually assume that stakers and operators are going, or operators are going to do the right thing, there is no additional, real risk. Of course, there is smart contract risk, but that also exists in a liquid staking protocol, right? So there is a world in which even if the relative yield of like Eigenlayer is small, it's still worth it, because it's a little bit more for, and you still have liquidity, and you still have, like, you can go and do all the other things. So okay, so that's just to set some, comparative expectation, because you have something like Lido already there. You get you stake, and then you get an ST ETH. And what is the fundamental risk of holding ST ETH? Is that the operators don't do something malicious. That is the fundamental risk of holding ST ETH. And there's something similar that you can build on Eigenlayer. Of course, you're adding the fact that the AVS slashing contracts are correct, and some few other things, but the core Eigenlayer contracts is similar to the core, let's say, Lido contracts. And so you could do that. Okay, so that's the first thing to normalize. Even if a lot more stake is sitting on Eigenlayer, as long as there is the liquidity premium is, you don't have to pay, because you have liquid staked tokens that actually have, can be used elsewhere. That's number one. Number two, what is the rewards that people are getting? We think about real fees actually being paid to the AVSs and then come back. I think that's still going to be a bit further in the future. What we do see is AVSs have token emissions that they're using already for security. They'll be paying a portion of it to, whoever is securing it. Usually, you look at the total market of, in Cosmos, in like every chain, how much is given for inflation. A portion of it can be allocated to, each stakers in Eigenlayer. So that's a second, like, thing that we are starting to see will happen. And when we're designing, for example, I've mentioned the payment router and the payment system. We're observing and understanding what is the market dynamic here that actually will play out, so that we build a payment system that's actually compatible with it. So that's the second one. So the because a lot of the real yield, which is actually people paying in ETH, and that satisfying the ETH stakers, is further into the future. It is not this year, right? So that's the next thing. And this is different from, oh, because people are using the system, they're going to add drop or some other thing. Like, that's not what I'm talking about. I'm talking about paying a fixed fraction of their inflation to the stakers that are actually securing their system. There is a clear synergy and a win-win deal there. It's not out of goodwill you have to do something. Okay, so that's the other part. And the third one is, I think when people think about this, I saw people writing like thread and so on about uh, how much security is enough for a given AVS, and in a pooled security model for everybody, like, oh, 1 billion is good enough. I think this is I think maybe other people built restaking. This is how it would have looked. We do not, we are not building a system where everybody thinks they have the same security and that security is completely leveraged. That's not the system we're building. We have in Eigen, we have a system called attributable security, which we just talked about. The idea of attributable security is that you can slash and redistribute a portion of the stake to the you know to the different AVSs. And when you have attributable security, this is non-leveraged. So the total amount of attributable security so Eigenlayer maintains a calculation called proof of solvency. And proof of solvency basically means even if you know each AVS has a certain amount of attributable security from the Eigenlayer protocol, even if all of them trigger slashing simultaneously, the the total all the attributable security can be honored simultaneously. That is the proof of solvency. So the way we don't do this by decoupling the pool. We don't say, oh, in AVS one I have $100 million stake. In AVS two I have $100 million stake. No, that's not what we're saying. Saying the stakers are staking into potentially everything, into whatever they want, and potentially everything. But the protocol, the Eigenlayer protocol, takes up the role of how to allocate and these attributions across these things, collect the fee of all of them, and then redistribute to all the stakers. This kind of like a central crypto economic engine is running through Eigenlayer. So once you go to the attributable security world, it's clear that AVSs, a base built as an AVS, would want much more attributable security than a kind of like a random AVS. And so you want to make sure that there is this expressivity in the protocol so that people are paying for actually something that they're getting from the protocol. This kind of like attribution and attributable security is coming up not only for ETH staking in Eigenlayer, but also for Eigen staking. So Eigen staking, when you go back to the question of whether there are hundreds of AVSs trying to use the same stake, how do we know that the system is in crypto economic equilibrium? Because each AVS can specify how much attributable portion that they have that they can slash and redistribute. So that's how the kind of Eigenlayer system works. So the 3 points are: number one is minimize opportunity cost. Number two is, before real yield comes in, the AVSs use a portion of their token to actually fund security for themselves. The third one is actually create an incentive for people to have a portion of attribution to them instead of being smudged into a big pool where they don't know what they're getting and therefore not going to pay for it.
That makes a lot of sense. I've personally been pretty involved in like the Cosmos ecosystem for a while, and like saw the launch of replicated security, saw all the issues with replicated security. Obviously, there's like a lot of lessons learned and best practices from, I think, like Polkadot's like crowd loan and para auction slot mechanism. I think one of the questions I have is like around the payment structure specifically. One of the concerns that I've had, and this is not Eigenlayer specific, this is shared security as a whole, because you kind of hit the nail on the head. Like a lot of these AVSs or consumer chains, whatever you want to call them, it takes years for them to hit sustainability where they can really function on their own, stand up their own validator set. And I think that's been a lot of the points of contention, I think, in the Cosmos ecosystem around the Cosmos hubs, like consumer chains. Is there like a general, one of the concerns I think I have is like this idea of security mining. So in DeFi, you saw liquidity mining. You saw people farming, emissions for DeFi protocols. And I think one of the concerns I have, and you're going to see, I think, in other shared security models as well, is like depositors are going to farm emissions to secure the chain. And the moment that those emissions dry up, they pull out their assets, and then they maybe move on and attribute their security to another AVS. Is there like a mental framework, or is there a framework that either like the liquid restaking protocols themselves are taking on, or maybe Eigenlayer, Eigen Foundation is taking on, to try to like create a model for like what does a good emissions budget or security budget look like as an AVS? And maybe this is application specific to the AVS, but we'd love for you to like kind of opine or
Yeah.
maybe elaborate further.
Yeah, so the way we solve, okay, so there's two parts to this. how do you set the security budget from an AVS point of view? What's the right inflation? How much do you pay? Very, very hard kind of question, because when you set this parameter, we could, for example, set a parameter and say you have to pay X%, right, of your token, and that's what is you have to do. If this is misset, then you either miss a large portion of the market, they just go away, or it's too low, and the real fees model that the replicated security was running on, where it's too low, it's not enough to keep the system running. So how do you have enough expressivity in the market that basically you're making sure that all the market participants are actually meeting their demands? Otherwise, this market will unravel. And it is a hard question. Okay, so we think about it a lot. It is this is not the kind of thing where you can simply many like systems which look like they're taking off will unravel if the market structure is not correct. So it's very important to get it right. But going to the thing of what we are doing, despite like how to make it robust, right? One thing is draw a lot of pools, always have a lot of pool security, but have a portion of attributable security. So this is the kind of first principle. And the principle is that, hey, if my rewards dry up, I should still get a lot of pool security. What do I mean by pool security? The cost to attack my chain is still high. I want to maintain that. But I will not be able to slash and redistribute a lot. It's okay. I mean, like, that's all that you can afford. That's all that you are paying for. That's all that you'll get. So this differential quality of service, which is that if you pay more, you get more attribution, but a lot of people get a lot of pool security. So that is one very important concept. But one thing when we're talking about pool security is right now we are only calculating the cost of capital. There's also a cost of operations. So we have this framework, again, like everything's gradual and in phases in Eigenlayer, but we have a framework for computation payments as separate from security payments. In fact, this I think is the biggest error in all of crypto today, is these two are smudged into one thing. Like in Ethereum, you're paying a transaction fee, which is gas. It seems like it's for computation, but really computation is much cheaper in AWS. Why are you paying for gas on Ethereum? Because you're getting security and computation are smudged in to one cost. They should not be. They should be different. So Eigenlayer will have computation payments, which basically keeps the computation and the operators afloat, because that's the marginal cost of pool security. Is I have a pool, I want to just add on more things. I need to make sure that the operators can run at a healthy profit margin. That's the computation payments. And things that have more computation should have more computation payments. Things that have less computation should have less computation payments. So computation payments as a separate phenomenon from security payments, and security payments for pool security as a different phenomenon from attributable security payments. So basically, create this graded structure of what are you paying for, what are you getting, how do you keep that market participant healthy and active. So
I think, yeah, no, that makes sense. It's definitely not an easy problem to solve. Nobody's really come up with it, but I agree generally. Like, there's two payment structures. It's paying the node operators and then paying the security, which is paying the delegation, the assets that are backing the node operations, node operators. One question, one follow up question to this, and obviously Westy and Bakachi, would love for your time and after. What are your thoughts on validator bonds specifically? Because one thing that I think I've seen, I think ETH Research write a little piece about as well, is in DPoS systems, node operators are obviously delegated their stake, overwhelming majority, but at what point is they don't necessarily have skin in the game themselves, because they maybe I know some of the top operators in Cosmos ecosystem, for example, 99.9% of their stake is delegated to them, and they have no they don't own the own native asset of the proof of stake network. Do you envision? And I know this is very hard to have like on chain rules for like off chain actors, because you can, especially like with centralized exchange validators that control their delegated stake, they could always put up their own customers' deposits as like a validator bond. But do you envision a system around Eigenlayer where there is like the more stake you get through Eigenlayer deposits, the more bond you have to put up as your own on your balance sheet?
No, we don't have that at all. Somebody could build an LST or LRT on top of Eigenlayer, which actually enforces that, kind of like Rocket Pool, right? So Rocket Pool has that kind of a mechanism, but we don't have it. We don't enforce it because why is this? Uh, Imagine you're BlackRock and you want to make a deal with Coinbase to actually run, your node operations correctly. There is a massive amount of not only trust but also legal compliance and other things which makes the operator behave correctly. So by enforcing anything in protocol that now Coinbase has to put up like $1 billion for every $10 billion from BlackRock, we are enforcing a market structure that is not necessary for that participant. So we want to create like a universal mechanism. So we don't want to enshrine a particular opinion that this is how trust is formed between the staker and the operator. But we want to encourage many, many mechanisms of trust to be formed between the staker and the operator. So some LRT would be like Rocket Pool, and they'll do this. We also have other mechanisms for enforcing trust between staker and operator. Some operators already we have like uh, LRTs like this, which are run your uh, run your node operations inside a trusted execution environment, which is a hardware protection. So unless Intel's crooked or whatever, like I would basically be sure that this is the code that the node operator is running. And you don't have to run the entire code inside that like hardware module. You only run the critical code like signature issuance, and you don't double sign. Like that is happening inside that module, for example. So so we call these anti-slashers, right? So you're basically like making sure that you can't get slashed, because the thing that triggers slashing is double signing, and the double signing code is not run like it's run inside this trusted execution environment. So even if the operator goes rogue, unless they break the TE, they cannot actually break the get you slashed. So this is a different trust model, right, between staker and operator, and solving the principal agent problem. And in general, putting this pressure onto the staker that hey, if you don't delegate correctly, you will lose your ETH, is actually a really interesting and important thing. It's one of the things we're thinking a lot about, is how to make sure they feel this pain so that they actually do this delegation correctly. If you make slashing really, really, really rare, then they'll never feel this pain, and there'll be just like one major catastrophic event where everything gets slashed. So you have to make them feel the pain in the short term. So I don't want to give up too much of our new slashing design, but that is these are important issues that we have to consider to actually build the system correctly.
Awesome. I definitely want to get your thoughts on. So we've talked about like basically this two token system of ETH and Eigen. What we're going to start to see is like almost third tokens in the system, which is the AVSs themselves. Like obviously, as an AVS, you're going to want to provide the most value to your individual token. So I'm wondering your thoughts specifically on how like a third token, an AVS token, potentially fits into this roadmap. What are some things AVSs need to be considerate of like, yes, you want to provide value to your token, but you also need to provide the most security to your users, etc. So like, what are the things you're thinking about of like introducing a third token?
Yeah, Eigenlayer is designed on the principle of open innovation, which means let the people decide what let each AVS decide what they really want to do. How much of shared security do you want? How much of personal security do you want? But I want to just say that these three different quorums provide very different kind of security. Each staking provides objective slashable security. Eigen provides intersubjective social slashable security, and your own token provides alignment, which is a different kind of crypto economic security. Your token stakers are the most aligned. They take exposure in your ups and downs. So if there was something which was neither like intersubjectively attributable nor objectively attributable, but is going to lead to downfall or degradation in your own value, they are the ones who will feel it the most. So these are different kinds of crypto economics. This is like a Swiss Army knife of crypto economic toolkit. So you decide what aspects you want to load on like your own token, what aspects you want to outsource. So it's designed to be this flexible system. So a lot of people say to me that, oh, over time, maybe all the AVSs, they'll rely only on their own token, all of this. It's possible. If that happens and that's what leads to more innovation, it's amazing that we helped bootstrap lots of new AVSs. But we do think there is a lot of value of shared security that people don't fully understand. For example, when you have 5 services, DA, Oracle, data storage, AI, whatever, that you're integrating to actually create an end user application, if the same stake is staking to all these applications, I only need to take 1x the attributable security instead of 5x the attributable. Imagine there was a separate insurance for an Oracle, separate insurance for a DA, separate insurance. I have to pay 5x the premium to actually get, I need to make sure the Oracle is secure for 100 million. I have to make sure the DA is secure for 100 million. I have to make sure each of these things are secure. Instead, what Eigenlayer does is offer an economy of scale so that the same stake secures all these 5 things. You only need to take 1x the insurance, and that protects you against all faults of all these different people. That's a really, really, really crazy benefit. So over time, the economy of scale outweighs. So just kind of sense of numbers and how we think about it. A typical cloud application uses 15 SaaS services in the backend. This is our vision for where crypto will head. A typical crypto application will use 15 AVSs in the background. And like you just bundle all of these. So Eigenlayer allows you to create post-market bundling. So I'm the best guy to build an AI inference. You are the best guy to build an Oracle. Somebody else is the best guy to build a threshold encrypted mempool. They build all these things, and I just go and subscribe to these services. And I have an economy of scale as though they were built pre-market. Somebody decided, like Terra bundled the Oracle and the chain, right? And they bundled the Oracle into the chain. And this needed like somebody to think that these two had to be bundled. Eigen gives you post-market bundling, open innovation, and shared security. And there's a superpower of economy of scale there. And if it's worth it, people will stay. If it's not worth it, they'll go to their own token. And it's exactly how it should be.
Perfect. Shriram, I actually have a question on how you guys approach AVSs, or rather, like how AVSs approach you. This is something that I've wondered for some time, because obviously the end goal is like hundreds and thousands of AVSs. What level of support do you guys provide to these AVSs, and like do you guys actively seek services? Do they
Yeah.
come to you? What's the relationship like?
Yeah. I think right now I would say there are 3 categories of how we interact with AVSs. There are one is, I'd call them bundles. So pre-existing bundles, like AltLayer has a bundle called Restaked Rollup. It's a bundle for actually running like a rollup with sequencing and validation and finality on top of Eigen. And so they've already built it. And so what they do is they go and get like lots of people to come and use it. So this is a bundle. Ethos is basically built a Cosmos SDK on top of Eigen. And so they can basically get consumers to actually come and build it. So they have inside their own framework some kind of atomic composition, whatever. So they have their own economy, but it is so this is one aspect, bundle. So the bundles can scale a lot because it's just the same box being run by like hundreds or thousands of these different people. The second one is, there are outside teams which are actually building things like SDKs to help AVSs build new things. Authentic is one of them. We have others coming up, but that basically is a market where they're saying, hey, you want to build an AVS, I'm going to help you build an AVS. So that's a second one. They have a set of tools. They have personal interaction and so on. And of course, we also do it, but our bandwidth has been somewhat limited, and we are scaling that effort quite a bit. The third one is what I the third category of AVSs is, you know, we call these actively validated services, not chains, and it's for a good reason. It's because we think that these services are the minimal atomic unit of what needs to be built. And then you should be able to concatenate many, many services and create like your own, end application. So this is a different view than both the what I would call um, a single chain view of the world or kind of like a roll up view of the world. This is basically saying each application basically concatenates a bunch of like decentralized services, and that's what an application is. And the in this world, so what we do is we have put up a lot of ideas on what is the structure of AVSs. We work closely with people who are inventing categories of AVSs. So whether that is a ritual which is doing an AI inference, whether that's a Phoenix that's doing fully homomorphic encryption or Inco, or people who are basically like inventing new categories of like what could be structured as AVSs, that's like really hard because you have to come up with a brand new protocol. You have to think about it from first principles. You have to figure out what is the trust model, all of that. So because that's the place our own inputs are most helpful, is kind of navigating the landscape of trust models. So that's the three categories that we have with bundles, custom help and tooling. And then the third one is actually, working together to design the protocol.
Perfect. And kind of going off that, EigenDA is obviously closely related to Eigenlayer. Are you guys planning on launching any more, like AVSs or intersubjectivity services?
No, we are expecting or working with other people to launch more services. We already have way too much to build just to get Eigenlayer going. So it's not our intention to necessarily build all the AVSs on top. Our intention is to encourage people to build AVSs on top. And the thesis is open innovation, right? And the thesis of open innovation basically says that the the amount of insight and innovation that exists out there is far higher than the amount of insight and innovation that will exist inside any entity or company and or a core development team. And that's our core principle. But there are some things that unblock a lot of other things downstream, right? Like those are the only things that we will try to build, is things that require coordination across all these AVSs, things that require like a place where all of them will come and coordinate. So we want to be the coordination layer for innovation. So other people innovate, we just help coordinate.
Perfect. Westy, Effort, do you guys have any other questions for Shura?
Yeah, I can. So in the paper, it mentioned the Security Council, and it mentioned like this progression from like V1 Eigenlayer to V2 and then V3, and how eventually, in I guess like the end state, Eigenlayer doesn't have to rely on the trust assumptions of the Security Council. It is my understanding correct that the Security Council is likely going to be something as part of the Eigenlayer system forever, but in V3, like it doesn't necessarily require the Security Council to be around, or it.
Okay, so there is a difference between the eigen staking and ETH staking. Okay, so in ETH staking, because all faults are or objective and on chain, what's going to happen is each AVS will initially be on the Security Council, and once it's ossified, it can go without a Security Council. But there has to be something like that for ETH staking, because ETH staking has on-chain slashable faults, and only some set of them can be so like well tested that you can just go without like a slashing veto. On the other side, with Eigen, because the intersubjective like forking is much more powerful than a committee. right? Because you can actually fork on things with intersubjective understanding. You don't need a committee. So the goal of eigenstaking is to be free of any committee, and that's the superpower of eigenstaking that we unfortunately haven't found a way for how to get rid of that for each staking. But each AVS can have a journey where they say initially they go on the security console and then they ossify and then they go out of the console because now they are well tested.
Perfect. I guess like just to wrap it up, Sriram, do you have any thing you wanna? We talked about the roadmap early in the episode. Do you want to share a bit more about what's coming up?
Yeah. The the next milestone that we're looking for to hit on the mainnet is payments, because it's clearly the most burning problem. People think slashing is the most important thing. There are many existing systems without slashing, right? Like many chains, maybe most chains other than Cosmos and Ethereum don't have slashing. And Avalanche subnets don't have slashing. Like slashing is a kind of like an optional feature, and we have to be careful when going with slashing. So the next feature that's rolling out on mainnet is payments, and that I think sets up the market structure a lot. So, or at least gets the market structure starting, so we have real feedback to adapt it. The payment's not going to be in the final form; it's going to be a starting form. The thing with payments and slashing is these two are coupled in one way, because you're paying for node operations and like stake, but you're also paying for like, are you paying for attributable security? Are you paying for pool security? These have different like economic models. So there'll be an evolution of payments along with slashing, but the initial form of payments is that's going to be the next one, within let's say 3 months coming up on mainnet, and then slashing. So those are the two main things. The other thing that we're going to be doing in parallel is conversations like this, where we actually talk about like how forking works, what are these parameters, and kind of get to a common understanding of, okay, this is the set of parameters, this is the how much you have to burn in Eigen, like all of this stuff, and it's set. And now we can, because right now, even though Eigen staking is going to launch soon, there's not going to be the forkability. So forkability is going to be a feature that gets added. The contracts are there to do it. We want to be careful in rolling out again, like the phased deployment approach that we always have. So that's the next set of things that we are looking forward to go live with.
Perfect. Sriram, thank you so much for joining us. Really appreciate you taking the time to dive into the white paper and to talk about everything that's coming up.
Thank you
So
so
thank
much. This is so awesome to do this with the 0x research team and Blockworks. Thank you all.
Thanks, Sreeram.
We have teamed up with the Wormhole Foundation, stewards of the Wormhole protocol, the leading interoperability platform powering cross-chain transfers for over 200 plus multi-chain dApps. Wormhole isn't just a bridge, it's the leading interoperability platform for multi-chain applications. So go and claim your unique Wormhole NFTs just for 0x Research listeners today. Hit the link in the description to fill out a form and to prove that you've listened to today's episode and receive a POAP. You get an email over the coming weeks to claim your limited edition NFT.